Hey traders, Ken here from the Dyslexic Investor. We are going to be just doing a quick little recap of a couple things that we talked about in the last coming weeks. So I'm still in the BA trade here. It hasn't broken this level here that I've kind of made like a line in the sand, a very distinctive line in the sand. If it breaks through this, more or less the 200 simple moving average, which is this dotted white line here, is the idea when things could turn worse for the company. There is a couple bad news. It lost a couple contracts to Airbus, to China, a deal in France that was a couple billion and so forth. The chart is still printing red candles here. As you can see, that is kind of, again, below a lot of these key moving averages that I like to follow. Again, but it's building a base here. It's got the gap fill, what I explained before. Again, I'm continue to hold it until I see this break in this level, these two support levels here. That was one, and then we looked at Adobe. Oh, I spelled that wrong. There we go. For an earnings play, a run into earnings, it did fantastic. A run into earnings, kind of did a slightly disappointing on a couple numbers, but kind of rebalanced. A lot of what a lot of people were fearful of the Fed announcements that was coming, on the sense of they might have to raise rates a couple times, but then last week they said no rate hikes. This past Wednesday. There's no rate hikes for this year. We'll get another video into the understanding of the rate hikes and how the Fed affects everything. But Adobe was a great trade. Another trade was Ulta that I traded, Ulta Beauty, into earnings. Didn't hold it into earnings, but again, hindsight, I should have held it into earnings. But wow, like what a move here, from like 300-ish to $50 move. Fantastic move there. Apple had a fantastic run here as well. Again, a lot of this is just the explosion of I think people to the run of this event, because they usually schedule it 2 weeks ahead of time. They'll let the press know, like, hey, we got a special event going on, blah blah blah. We kind of knew that it was going to be something to kind of compete with the Netflix, the Disney Plus that's coming out this year as well, and so forth. So this was a nice run up. It's still very printing green, so it's still in an upwards trend here. It's above these moving averages. It's still printing higher. Again, Apple's a huge long-term position for me, so this doesn't even, I have to look literally on a monthly chart. For me, it has to break down like way above like 80 something, so it has to break over here. Again, anything can happen, but it's got to break below 80 for me to actually start losing money in these key areas. But you can kind of see there's huge resistance going to be here at 96 and 130, which I have these alerts out here for the fire line and the gap fill. Here with this circle, I had this projected out when this was coming down. I had this projected as a huge circle to buy at that marker, but never actually got down to that level because the 200 simple moving average on the weekly chart, again a weekly, so each of these bars is 1 week, not a day. I literally came down to the tick and saved it there. That's quite fantastic how that works. You can see on the daily, kind of broke right through that. Didn't really, kind of stop to kind of touch it again, kind of give it a kiss goodbye, and then it just came straight down. And then of course, beginning of the year didn't do well. The low of December, so forth, blah blah blah, and then the run up of just the past beginning of this year has been really fantastic, with little to really small pullbacks here, and continuously growing. Couple other stocks that I'm kind of looking at. So as of right now, I'm not in. I'm still in a couple of long-term positions. There's a one that I've had waste management for years. Again, it's my portfolio, long-term positions. Again, in my long-term positions, usually I hold things for 5+ years. Shorter term, my stuff is like when I trade, I say it's anywhere less than like 3 to 6 months. So like the longer swing trading, and then I also do sometimes trade options within like a month-ish to 2 weeks out, kind of options expirations. But I have more success in longer term stuff and understanding the charts in that way. Waste management, again here, showing this low due to the market correction in December, the very low on the 24th of December of past year, to a significant low, and just up there we have had a beautiful run. Didn't actually buy any of this, so it's another, what is that, 23%? That's fantastic. 23% in about 91 days. That's wow. That's literally just been hugging the 5 and the 8 EMA all the way up, and getting a slight pullback here. That was due to potentially of the Fed stuff, but then since then just kind of been running up. And just, if you want to trade this aggressively, you can trade anything, but this is a long-term holding. Like anything that would touch this blue line, this 8 EMA, just kind of buy it on the way up, or even be a little more conservative. Where I like to stand is this yellow line, which is the 21, where I kind of just, that's like the significant conviction of buying in the swing-ish of things, because you kind of see it kind of bounces in around the yellow line there. Again, that's basically what I have today. I'm kind of looking at some of the bank stocks, looking at Bank of America, JPMorgan. Of course, they've been beat up due to the yield, not raising rates. Of course, majority of banks make a lot of their money when interest rates are slightly higher, so they can get interest on the money they have in the reserve and so forth. But let's look at it's an XLF, which is the Spider Financial ETF. You can kind of see here. Definitely broke through that yellow line. Didn't really hold. It's been printing a lot of long red candles, which is usually a sign that I don't really want to buy that kind of stuff. On a weekly chart, yeah, it broke through the 21 as well. The 200's down here, so this would be a strong buy for me in and around this like 23.42 level in the XL. This will rise with the stock going up and so forth, but in around like the 23 to 24 level would be considering of buying some XLF long from that point on, depending on how stable the markets are and so forth from that point. This is actually where I traded it before. Never got out right before the high. Isn't that pretty cool? That's awesome. All right, guys. Thank you so much for watching. Definitely greatly appreciate it. If you consider like this content, consider subscribing. Hit that like button. Again, guys and gals, take it easy. This is KB. Peace.